Hey YouTube, John the Economist here. Long time no see. I've been in Michigan for the past 2 weeks, visiting family. That's my home state. I go to school out here in Virginia, so this is, where I reside. But anyways, that's why there hasn't been weekly uploads for the past few weeks, but perfect time to do a market update, right? So we're going to keep this pretty brief. I pretty much just want to focus on one thing, which is, a lot of people are saying, oh, we might be reversing. That could have been bottom. And now we're seeing a relief rally and all of that good stuff. And, first, before looking at Bitcoin, which I think will illustrate my point the best, let's just take a look at some of the legacy markets, equities, all that good stuff. So, the biggest thing that I think is worth taking a look at is, and here, let me take this off a logarithmic. A lot of people are just saying, oh, like we're back in relief rally because, there's a low, there's a higher low, and now we're off to the races, right? But the biggest issue is, if we're looking at a trend reversal, we want to first of all see a higher high, which we have not seen yet. So that's the very first thing we need to check off before thinking, okay, the markets have reversed. A higher low is great and all, but that can just turn into a wedge pattern, which usually breaks to the downside more often than the upside, or a bear flag, or whatever you want to call it. I mean, they're just arbitrary diagonal lines at the end of the day, anyways, right? So I don't think we're in like any position to say that was bottom definitively. And honestly, I'm not super convinced that that was bottom. I actually think, we still have a decent amount to go. Testing the COVID lows or the COVID pre-COVID highs as support is great and all, but I think that we probably still have lower to go. Um, and a lot of the same can be said for the Nasdaq and the S&P 500, of course. But really, like the biggest thing that I think helps illustrate this point is where Bitcoin's at. So I'm going to add our moving averages here, and there's a little bit of noise here because I'm frugal and don't have separate moving averages for everything, so you get all of them at once. But a lot of people have talked about this general trend line, right? Or I've also seen this general trend line, and people are like, oh, we're breaking out of the downtrend. But I don't think that that's a good metric, because first of all, you can always leak out the side of a diagonal trend line, right? Like you could have taken this trend line or this trend line, something like that, and just leaked out the side. You can't say that's reversing or that's a trend reversal. That's where you maybe can start paying attention, right? The other thing is if you make the scale logarithmic, like where are you drawing that trend line? You can't really get close enough to touch that top there, so that doesn't work. And then if you draw it based off of the tops here, that definitely doesn't work either. We have a ways to go before we even hit the trend line. So I would argue that if you're a new trader, you should not be trading just breaks of diagonal trend lines, right? That's not really going to lead you to victory per se. Instead, you should be setting up horizontal ranges and then seeing if it happens to exit a new range. And if you really like, support and resistance lines that wiggle a little bit rather than just going horizontal, then you can use moving averages. And actually, that brings me to my next point. Bitcoin and bear markets very frequently finds resistance at the 200-day moving average. And when I say frequently, I mean that when we got above it here, we went on a pretty major bull run, and then we fought it for a while and even capitulated again before really sustainably getting above it to go on a bull run here. Even more importantly, though, is when we went into the 2017, 2018 bear market, like you touched it there, saw a lot of downside, touched it there, saw a lot of downside, right? And then we just kind of ran out of steam and then fully capitulated an additional 50%, right? I don't want to, suggest that we're going to see 10K Bitcoin, but like we could see 10K Bitcoin, like it's not completely out of the question, right? So if we keep finding resistance on this 200-day moving average, which is this white line here is just suggesting what the continuation of this 200-day moving average trend can look like, right? We got a rejection off of it here, and what did we see, right? About a 64% drop off of that rejection. It is possible that we can work back up to it here, struggle to get past it, and see another rejection, right? And then go down to another likely horizontal range, like, I don't know, the top of the 2019 bull run, right? So you break that and you go open, and then we're at like 14, 13K Bitcoin. Again, not saying this is going to happen. I'm saying that this is a possibility that you should be prepared for, right? So on the other hand, if we do get above the 200-day moving average and start working to hold it as support, then, maybe we have a different situation. Now, one thing that I've talked about in reference to these bear markets is that the dollar currency index needs to start coming down, and inflation needs to start coming down, and the Fed needs to stop raising interest rates for us to have a sustainable run. So far, zero of those conditions have been met. If you take a look at inflation, I might have to do some clicking here. Nope, sweet, got it on my second try. Huge, right? Inflation has not slowed down. We are still very much in an uptrend. Until we are not in an uptrend, and we start seeing a sustained move down, we can start that discussion. The other thing is the currency index, right? The United States dollar currency index. While it has gone into a decline, I'm not going to say that it has ended its uptrend, right? Once we see like a true like lower low, then we can maybe have an argument that its uptrend is ending, which means that, it'd have to fall depending on what you consider the low, but I mean, it'd have to fall beneath 100 again, right? Or maybe this is the new low that's set and it goes higher from here. And then we'll look for a lower low at 106 or whatever, but this can keep going, right? So definitely keep an eye on these indicators because there's like no room for a bullish case right now as long as the US dollar currency index is increasing, inflation is increasing, and the Federal Reserve is raising rates, right? It's just the bull market will not happen, and you will just be stuck around waiting around for it if that's the case. So you just want to keep an eye on that. Now, how does this change it? And again, this is kind of what I'm using as my benchmark right now. I'm going to get rid of the moving averages again. Horizontal resistance. I'm going to switch this to logarithmic and adjust the scale. I'm sorry. I'm a little bit rusty. It's been a few weeks. If you look at this, right, like just horizontal ranges is all I'm working with right now, right? This like 40K-ish level seems to be important. It seems to, find an area either to break above and enter a new range or, chill out beneath it for quite a while. This range, there has not been a whole lot of gaps filled here. So I think we're probably going to just bounce around inside of this range for a little bit, right? Or again, we get that rejection off the 200-day moving average and we go down to this range and hang out there for a little bit. All possible. But this doesn't change my strategy, right? Right now, I'm going to switch to the weekly chart. I'm going to switch to my chart with nothing on it. And then I am going to bring back our friendly moving averages. Right, we're well below the bull market support band, which is the 20-day moving or the 20-week moving average, excuse me. And for the first time in Bitcoin's history, we're pretty sustainably below the 200-week moving average too, right? Now, personally, I see value here. So my strategy is to just continue dollar cost averaging because I see value, and that's fine. And to me, I don't care if, it's 30K where I'm seeing value or 13K where I'm seeing value, because I'd say anywhere between those two numbers is an area where I do see value in purchasing Bitcoin personally. So I'm just recognizing, okay, look, we're in it for the long haul. We're going to be in a bear market for a long time. Once the bear market is over, we're probably going to chop sideways for a long time. And then maybe one day we'll work up the confidence to go on another bull run. But between then and now, once a month, I'm just tossing in X amount of my paycheck into the market, and Bitcoin's, a pretty big chunk of that, just because I currently believe in the asset. I'm not really touching altcoins very much right now. I'm suspicious of tech stocks and anything like that. I'm just kind of keeping it to Bitcoin and, a couple ETFs that I like, right? Pretty simple stuff. So bottom line is that I'm not super convinced that this current upward move in the stock market and the crypto market is a sustained upward move. I don't think this is kicking off a new bull run. I think we have a ways to go before bull run becomes a part of anybody's vocabulary. Probably a year, maybe two, right? Again, we're waiting for inflation to start coming down. We're waiting for the US dollar currency index to start coming down. We're waiting for the Federal Reserve to begin quantitative easing again. And when those three conditions are met, then we can start talking about a bull run again. Until then, I would expect sideways chop or a downtrend to continue. And again, that's okay because this is where the real money's made, right? We're seeing value. We're investing in assets that we believe in over a long time horizon and don't care what they're going to look like 6 months from now or a year from now. We're curious about what they're going to look like, 5, 10 years from now. If you do some trading, that's a different thesis, right? But we're just taking, a snapshot of the broader markets and how to respond to those as an investor, or how you could potentially respond to those as an investor. So anyways, I hope that was just, a nice quick snapshot of everything. Tried to keep this short, tried to keep it under 10 minutes. I have failed, but we've gotten close. So anyways, I hope you guys have a wonderful rest of your day. And I'm looking forward to doing some more in-depth content coming up here. I have a move coming up this weekend, and a couple other like research projects and stuff. But I'm hoping to be back into a weekly cadence by August, where I can make sure that we're keeping an eye on all of this important stuff going on in the markets. So until next time, I will catch you guys later.